this partnership accounts, where we are going to change a partnership to a limited liability company. So audit firms, just like law firms, we normally run them through partnerships. Of course, the more the partners you are, like these big firms like PwCs, you'll be surprised they have hundreds and hundreds of partners. So then at the end of the year, we must be able to do some appropriations. So and that is the first thing that you need to do. So come and make an appropriation account. So you give us here profit for the year, very fast, profit for the year. So I'm doing part one. So is there somebody who is able to see the profit for the year from the, yeah, Irene is giving us 91,000, right? So profit for the year from the, yeah, you can see profit for the year. You guys are so good. Net profit for the year, 91,000. Great. Now, this 91,000 profit for the year, if there is any interest on drawings. So remember, as partners, we keep on drawing, in this case here, amounts from the audit firm. Yeah, often. And because we would want to discourage drawings from the firm, we normally charge a soft interest, some interest, like it's like a soft loan to you. But now remember that soft loan is basically fake. So if there is any interest that had been charged on this amount has been reduced, you shall always add this interest back. So you add this, add the interest. So you're able to get, in this case here, this 91,000 there. In this question, ladies and gentlemen, we don't have any interest on drawings. Please don't forget that. Now, ladies and gentlemen, after you get this, now you'll be able to think about what kind of a payment do you give to these partners. Yeah, so for example, the partners there, they will be entitled to commissions, they'll be entitled to salaries, they will be entitled to interest on fixed capital. So we start with the first one here, which of course will be salary. So we less, in this case here, salary. There is nobody who is getting a salary. I'm just putting figures there for the sake of it. Nobody is getting a salary. We come to commission. Ladies and gentlemen, there is one person who is getting commission. If you read it here, there is one person who is getting some commission. Who is this? There is one person who is getting some commission. We are told here Kidole was the only active partner and was entitled to a 50% based on the annual sales revenue, which is 20 million. But remember, our trial balance is in shillings thousands, So you must cut those zeros. So you're talking of what here? 20,000. So in this case here, we have one person who is getting this commission, and his name is what here? Kidole. So we have here commission being appropriated, being distributed. All right. So in this case here, we have commission Kidole, which is 15% of this 20,000. So is there somebody who can give me this figure? So somebody is able to give me this figure. They're giving me a figure of 3,000. 3,000. From there, these people have given us capital, which will be able to enable us run this partnership into the future. What we call the fixed capital, what they can't withdraw. We must pay them, in this case here, interest. So that interest will be an appropriation. It will be a distribution of the profit. So come here and give us, ladies and gentlemen, the interest on fixed capital. Right there, interest on fixed capital. Interest on fixed capital. So interest on fixed capital, of course, everybody has a fixed capital there. So go ahead and tell us, Chanda will be getting, of course, we have got three partners. So we have Chanda, we have Pete, and then we have here Kidole. We have Kidole. So do we have, ladies and gentlemen, in this case here, yeah, already Sharon is giving us. Thank you so much, Sharon. She's giving us the total. Yeah, so you can see, ladies and gentlemen, in this case here, when you look at the interest is 10% per annum on fixed capital balances. So in this case here, each one of them will be getting 10%. So when you come to capital accounts, you can see our capital accounts, we have a Chanda 58,500. You can either aggregate them or you do them separately. So in this case here, Chanda is getting 10% of 58,500. 58,500. Pete Pete is getting 10%, 10% of 37,000. 37,000. Then we have Kidole. Kidole is getting 10%, of what year? 10% of 31,500. 31,500. So what amount do we have here? So we have 5850 brackets. We have 3700 brackets. We have 3150 brackets like that. Brackets like that. And then, now, ladies and gentlemen, the only thing that is left is for us to see whether we have a surplus. So you'll be able to take this 91,000, you subtract 3, you subtract 5850, you subtract 3700, you subtract 3150. Who can give me this surplus or loss? So somebody, you take 91,000. Yeah, so it's a profit of 75,300, isn't it? So this profit is what we shall be able to share. So share of a profit of 75,300. So you take this minus this minus this minus this. So remember, we have again the three partners. So we have here Chanda, we have Pete, we have Kidole. And they have given us the ratios of sharing these profits. At times there are losses, remember. So they have given us, are you able to see the ratios? Are you able to see the ratios? So the ratios that we have here for sharing, they gave us the ratios. It is 2:2:1. 2:2:1. So we have here 2:1, like, so this will be 2 over, of course, if you add here, over 5, isn't it? 2 over 5, 1 over 5. Times this 75,300, times this 75,300, times this 75,300. All right? So can somebody in this case here give me this 2 over 5 times this? What are we getting, ladies and gentlemen, here? So I'm being told here we have 3120. 3120. This and this will end up giving me the same, 3120. 3120, and then now this is 1 over 5. The last one is 14,700. So this is 14,700. So if you deduct this, you should be able to distribute the whole amount such that you have what here? You have a 0. Such that you have a 0. You have a 0. So I'm being told this is not 14. I'm being told this is 15,060. 15,060. 15,060. You don't even have to approve. Remember, up to here you got a surplus of 75,300, and this will add to 75,300, but you can do it on your own. Now, once I have this appropriations account, practically, this is something I normally see happening at the end of every year because I run a partnership. So in this case here, practically, you go ahead and give us, in this case here, just an account called what here? Partners account. Give us the partners account. Give us the partners what here? Partners account. So this partners account, what do we have here? We have description, and then of course we have the names of our partners. So we have Chanda, we have Pete, we have in this case here Kidole, like that. So we have our partners there. We have our partners there. I'll be able to change the camera a little bit just to capture the other side, just a little bit. Yeah, that's very good. And then of course we have here this other side as well. Just for lack of space, I'll write a description. Then we have our partners here. We have Chanda. We have in this case here Pete. We have in this case here Kidole, like that. So free marks, now they are starting from here. Remember, this is no mark will be given to you, but now free marks are starting from here. Remember, partners, whenever they have capital with us, the capital will be on credit side. Yeah, so in this case here, if you go to their trial balance, and then you see they have capital on the credit, you just bring here. So we start with balance brought down. Free marks here, really. So this balance brought down, are you able to see they are fixed? Are you able to see, ladies and gentlemen, they are fixed what here? Are you able to see they are fixed capital? Their capital accounts, are you able to see their capital accounts? Their capital accounts, these guys cannot see. These guys can't see. These guys are not able to see. These guys are not able to see. If you are keen enough, you'll be able to see the capital accounts that are here. We bring forward this. You can see Chanda is getting 58,500. 58,500 here on the credit side. On the credit side. So we have in this case here Pete getting 37,000. Pete getting 37,000. Pete getting 37,000. Kidole getting, ladies and gentlemen, here 31,500. So Kidole is getting 31,500. 500. What else in this case here are we able to pick out of this? Remember, this is capital account. All right, capital accounts being given there. Then we have their current accounts. Their current accounts, you can see again, 3 of them are on credit side. If one is on debit, you take it on debit. So in this case here, you write their current accounts. Current accounts in this case here, the current account, free marks, I'm telling you. Current accounts, we have 2,800. 2,800. We have in this case here 18,200. So we have 18,200. We have in this case, ladies and gentlemen, 13,300. 13,300. Is there any other thing in this case here that we can post here quite fast? So remember, now we have our account here. We have our appropriations account here that I would want to rub. So this appropriation account will be able to see so many things. We have a partner who earned commission. So you credit his account. So this guy earned commission. And what is the name of this person? This guy is Kidole. The others are not getting anything. So Kidole is getting commission. Like that. So this, I've taken care of it. They also got interest on fixed capital. So we have here interest on capital, interest on cap. Interest on cap, and each one of them got. So we have here 5850. We have here 5850, 5850. We have 3700, 3700. We have here 3150. Don't put brackets. Of course, these were for purpose of subtraction. Then we have here share of what here? We have share of profit. We have share of profit. So this share of profit, you're bringing them the way they are. So we have here share of profit. Share of profit. So share of profit, what do we have here? We have 3120. 3120. We have here 3120. 3120. We have here 15,060. 15,060. You stop it there. Come and rub. In my case, now I can rub. Is this board really visible? Is the board visible? Is the board visible? Is the board visible? I wait, okay? I wait. It's clear, okay? So it must be her network. I only want to rub this appropriations account because I no longer need it. I normally use this appropriations account to get some free marks there. To get some free marks. This appropriation account, I will use it to get some free marks there, and then I rub it. Very visible. Thank you so much. So can I rub this side now, ladies and gentlemen, so that I can move on? Yeah, great. Now, after that, you don't continue with that partner's account. You leave it. You leave it like that. Now you come and realize assets. You do a realization account. A realization account. So come here and do a realization account. Realization account. Very important account. Realization account. Now, ladies and gentlemen, basically remember the concept of pairs. The concept of pairs. If you remember very well, pairs, we are saying purchases, expenses, assets. The 3 shall always be debited. The 3 shall always be debited. Then we have in this case here revenue, liabilities, and the share capital. Revenue, liabilities, and the share capital. The 3 shall always be credited. Shall always be credited. So remember, my good students, here basically you are going to debit this account with all assets. Yeah, all assets in this case here, I'll be explaining which assets. Then you credit in this case here with what here? Liabilities. With liabilities. Yeah, tumejumuisha. There are 2 approaches. I hope you guys did this from your FA intermediate, FA foundation level. But even if you never did it, you'll be able to follow. Just put everything together. PALS, So PALS, remember PALS, it's purchases, expenses, assets. purchases, expenses, assets. I hope you have written somewhere there. Purchases, expenses, and assets. All right. We debit. We debit. And then we have here revenue, liabilities, and the share capital, you credit. Have you written somewhere? Have you written that somewhere? Have you written that somewhere? Done. Thank you so much. Done, done, done. So remember, you're going to, this is the debit side. So you're going to debit all the assets, in this case here, that were taken up by the business here. And then liabilities to be credited. Yeah, and then purchase consideration will also come here. So we are going to go through our trial balance, one item at a time. What you're supposed to know is that whenever you bring your assets to realization account, they shall always be at net book value. Always. Remember here, I'm still closing the partner's account. When we close the partner's account, partners will not take their assets for valuation. The person who will take the assets for valuation is the limited company. The limited company will receive those assets at market value, fair value. But whenever you're closing the partner's accounts, you're basically closing their trial balance figures. So whenever you're closing assets, you shall be debiting realization account, and then you credit the assets, and you're crediting those assets at net book value. So then you go straight away to the trial balance. Go to the trial balance. So trial balance, what have they told us here? In the trial balance, we can see here the trial balance extracted from the financial records of the partnership as at 30th September 2017 is set out below. So you can see we have here land and the buildings. We have motor vehicles at cost. We have office equipment at cost. We have furniture and fixtures. And then you can see we have provisions. So ask yourself, amongst these assets, which assets were taken up by the limited company? If you go to this particular note, we have a note, which is note number 2. Point number 2 of this note 2. We are told other assets and liabilities were transferred to the new company at the following agreed values. Those agreed values, we shall not take them to realization because you are not yet at the selling point. These are what we call the fair values. But of importance is us to appreciate here that we have land and buildings, we have motor vehicles, which were transferred to the new company. We have office equipment, we have furniture and fittings. We have inventories, accounts receivable absorbed by the new company. So in this case here, let's take them to the realization account as we tick. If you have your past papers, tick so you don't forget any. So the first one that was realized to the new company is land and buildings. So we have here land, and buildings. So we have, I'll just say land. So land, are you able to see the cost? The cost given is 123,500. The cost given is 123,500. We subtract its accumulated depreciation. What is the accumulated depreciation for buildings? You can see a provision for depreciation. Buildings is 2150. So remember, it's net book value. How do we get net book value? It's cost minus depreciation accumulated. Accumulated depreciation is the same as provision for depreciation. All right. So we have here 123,500 minus 2150. So is there somebody who can give me this? How much do we have here? How much do we have here? For land and buildings, you have to write in full. So I'm being given a figure of 103,350. I'm being given a figure of 103,350. 103,350. We go and pick the next. Please, here, I'm so 100% sure that most students on the realization account, they bring the fair values. Most of them. a good number of them, they will come and tell you, hi, realization, if it's land and buildings, why can't we pick this figure? Most of them, that's what they'll tell me. Why can't we pick this figure here? So you can see these were agreed values between these partners and what here and the new company directors. When we are doing realization account, we have not yet started negotiating for asset prices. Here, basically, we are realizing the assets at cost minus accumulated depreciation. So anytime we talk about assets being transferred here, assets that are going to the new company, they'll be taken to the realization account, but at net book value. The next one that was taken here to the new company, my good students, in this case here is motor vehicles. So you can see motor vehicles went. So we have motor vehicles go back to the net book value. The net book value that we have, my good students, here for motor vehicles is 8,600. So I can see 8,600. Are you able to see the depreciation of motor vehicle? Motor vehicle depreciation is here. It is 54,600. It's 54,600. So is there somebody who can give me a number to write? Any student who can give me a number to write here? A number to write for motor vehicles. I'm being given 26,000. Thank you so much. 26,000. Thank you so much. 26,000. Thank you so much. Great. We are doing very well. We pick on, in this case here, the next item that was realized to the new company. So to the new company, you can see we have here office equipment. This was transferred to the new company. So for office equipment, now go back to the net book value. Office equipment, I can see it here. I'll just write equipment. I'll just write there equipment. So for equipment, I can see 7,200 was the cost. I subtract, in this case here, the provision for equipment, which is 24,400. 24,400. So is there somebody who is able to give us this number for equipment? Anybody who is able to give us this number for equipment? Anybody who is able to give us this number for equipment? Now they're not talking to me, these ninjas. They are not talking to me, these ninjas. So for equipment, they're giving me a value. Its charts haven't opened, sorry. Yeah, so they're giving me 45,800. 45,800. Thank you very much. 45,800 like that. So again, we have the fourth item that was taken over. All assets, we are debiting them at their net book value. So the next one is what we are calling furniture and fixtures. Yeah, and this furniture and fixtures was basically taken up by what here? Was basically taken up by the new company. So furniture and fixtures go back to the net book value. It is 52,000. 52,000. So we have here furniture. We have 52,000 minus 52,000 minus 52,000 minus 18,500. So is there somebody who can give me this figure, my good students? Anybody who can give me this figure, my good students? Thank you so much. So already we have a figure. So they're giving me a figure of 33,500. 33,500. Usichoke, endelea tu hivyo kuangalia which assets were taken to the new company. Which assets were taken to the new company? Which other assets were taken to the new company? So ukiendelea hapo mbele, wanakuja na kuambia pia kulikuwa na inventory. So ukiangalia inventory, they're trying to tell you something that can confuse you. Book value, don't go for that. Once you just establish from this note that inventories were taken over by the new company that was formed from this partnership, you go back to the net book value. So in this case here for inventory, is there somebody who is able to see the inventory figure? So the inventory figure, of course, we take it the way it is because there is no depreciation for inventory. All right. So inventory, how much do I book in? Inventory, how much do I book in, my good students? Inventory, we have here 31,200. So we have here inventory 31,200. And then I can see we have receivables there. Receivables were taken over. So receivables were taken over and they have what figure? 25,400 instead of just sharing. So we have here 25,400. 25,400. 25,400. So have we been able to capture all the assets that were taken over? Board not clear, we shall overcome. Have we been able to take over all the assets to the realization which were taken over? As per note number 2, yes. Now we go to the liability side. So liability side, you have to be very, very keen, very easy. So what have they told us about liabilities? Yeah, John, thank you very much. They are investments, right? These investments were not taken over. Let's read this note. They weren't taken over by the new company. Yeah, you have to be very, very keen. These weren't taken over by the new company. The investments, what have they told us? Investments comprised equity investments which partners had acquired jointly. Each partner was to take over a portion of the investments equivalent to the profit share. So it means that these investments that you are seeing, ladies and gentlemen, here, please listen. The investments you are seeing here, thanks for bringing that. These investments were not taken over by the new company. These investments were taken over by these 3 ninjas. So assets taken over by the 3 ninjas, we shall give them their assets. We shall debit here when we reach that point. If they were taken over by the new company investments, then I would have debited here, because here we only debit this account. We debit it with assets that went to the new company that was formed. Is that clear, John, and everyone else? Is that clear? Is that clear that we shall only, to the relation account, we shall only take, thank you so much. So then we go to the liabilities now. So, and I hope you are ticking. Those guys who have got everything that you have taken, everything that you have been able to take to these accounts, you tick them, and then you'll be able to see what is left. So do we have, ladies and gentlemen, any liabilities that we shall be able to credit here? Oh, yes. For example, I can see accounts payable. So accounts payable, free marks, I carry them with a figure. So I'll only come and credit here, payables. So we have here payables. So payables, how much? Payables, how much? The payables, I can see there, they are 62 something, right? So we have here 62,400. Yeah. Do we have any other liabilities that you can see there, ladies and gentlemen? And of course, they have told us really. They have told us here, please listen. First of all, listen. They have told us somewhere here that current liabilities, you can see here, current liabilities were taken at book values. Even if they never told us, I mean, that is the rule. So all the current liabilities, what do we have there? We have payables, and I can see we have accrued expenses. They were taken over by the new, even bank overdraft. Yeah, I can see bank overdraft, yes. So we have here, bank overdraft was taken over by the new company. It's a current liability. So bank overdraft, I can see a figure of bank overdraft. I can see a figure of 17,550. 17,550. And then now, my good students, I can see accrued expenses. Those are current liabilities. Accrued expenses. These are current liabilities. Current liabilities. So current liabilities. So current liabilities, we have accrued expenses over how much? I wish I had a physical paper to underline. At times so that is accrued expenses of how much? Is there somebody? 4,000, right? Accrued expenses of 4,000. Accrued expenses of 4,000. Thank you so much. Accrued expenses of 4,000. Now, ladies and gentlemen, let's now read this question very, very well. Let's read this question very, very well. So you can see we have been able to capture most of this. Don't capture the capital accounts, or rather, the capital accounts we have handled. You tick. Net profit for the year we have handled. You tick. Drawings, I'll be able to handle drawings right now here very, very quickly. Don't worry about that. Current accounts, you have to tick this. Very good. Now, we are told here, look at note number 1. Kidole, note number 1 already we have handled this. Yeah, because we got some figure there. So note number 2, we are told the partners resolved to convert their business into that of a company to be named Chapeki Limited, with effect from 1st October 2017. under the following terms. Investments comprised equity investments which partners had acquired jointly. Each partner was to take over a portion of the investments equivalent to their profit share. The investments had a market value of 50 million. The investment had a market value of what here? 50 million. So now this is an asset that has been taken over by the partners. The ninjas have taken an asset. When they take an asset, we debit their partner's account. But now we have to be very, very careful. These investments here themselves, in this case here, they were worth 44,800. The investments you can see here, they were worth 44,800. All right. So we have here investment. Don't draw this, but very, very important. So we have investment account. So investment account, ladies and gentlemen, I can see a figure. Investment account, I can see a figure down here of 44,800. I can see a figure down there of 44,800. But in this case here, ladies and gentlemen, by the time we are selling our partnership to a company, yeah, by the time in this case here we are trying to, see this, we can see automatically that we were able to transfer this. Let's close this account. We are closing this account because remember this investment went to the partners. So we come here and credit here partners. But how much are we crediting it with? Remember the whole account is supposed to be 50,000 because the market value is 50,000. So and these partners, I even know who they are. I can go ahead and in this case here a portion. So remember, this is an asset that was taken by the partners. It wasn't taken by the new company. Assets going to the new company are the ones we realize here. All right. Those are the ones that we realize here. So in this case here, these partners, they took 50,000. So can you kindly go ahead and apportion this investment here of 50,000 before I tell you the difference? Where do we take the difference? So this investment, remember these people, they have told us they are going to apportion it using their normal criteria of 2:2:1. 2:2:1. So they have told us, ladies and gentlemen, if you look at this particular investment here, they have told us here, if you look at this particular investment here, they have told us investments comprised equity investments, which partners had acquired jointly. Each partner was to take over a portion of the investments equivalent to the profit share. The investments had a value of 50 million on this. Most importantly is that they were to take over a portion of the investments equivalent to the profit share. And their profit share is given here, 2:2:1. 2:2:1. So in this case here, could you kindly apportion this 2:2:1? So this gives us 20, 20, 10. This gives us 20,000, 10,000 like that. 10,000 like that. But now remember, these partners made a profit in the process. They made a profit. There was a gain on this investment. So this gain, you come and mention here the gain. What is the balancing figure? The gain on the investment. The gain on the investment. The gain on the investment is 5,200. Any gains that you get, any gains on these assets that you get, ladies and gentlemen, shall always be transferred to the realization account. Shall always be transferred to the realization account. Because also your realization account acts like a P&L. So you've gotten a gain here, so you're supposed to debit this account and then you credit the P&L. So come and tell us here the gain on realization, the gain on investment, just gain on investment, you just book the whole amount, 5,200, 5,200, 5,200, 5,200. So you write there 5,200. So the gain, not many students will be able to see this in an exam, but remember, everything you're doing here is a tick. Everything is a tick, 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 tick. There are so many low-hanging fruits here. Now we continue. Slowly, we are reading our notes now. We are reading our notes here because we want to balance this. We finish it up. Now, ladies and gentlemen, when you read here, what else have they told us? Go to this particular, so at least at this point we have been able to take care of it. We are told goodwill was considered valueless and therefore was written off. Goodwill was considered valueless and therefore was written off. So if it was this goodwill here, you can see we have goodwill of 26,000. So if it was written off, ladies and gentlemen, if it was written off, was it taken over by the new company? If it was written off, was it taken over by the new company? No. So it means automatically that this is a loss for the partners. It's an expense for the partners, and expenses are normally debited. So come and give us here goodwill. You debit here, goodwill. So goodwill, remember, in total it is 26,000, and we are sharing it out on this basis. So 2/5 times 26,000. You debit here. Yes, PC, yes. They're refusing there. They're saying no. I don't know why they're saying no. I don't know why they're saying no. So the goodwill there is 10,400, 10,400, 10,400. So goodwill is 10,400, 10,400, and then we have now 1/5. If you remember 1/5, that will end up giving us what figure? That will end up giving us what figure? 5,200. 5,200 like that. 5,200 like that. So this is goodwill, which is written off. Goodwill, WO, goodwill write-off. So remember, if it was being taken over by the new company, it would have come here. But now in this case here, this goodwill is being written off. It's an expense for the partners. Expenses, as per the Pearls thing, expenses shall always be debited. Expenses shall always be debited. At the profit share, I think some of you came in a little bit late because we did that account. We did an appropriations account, Paris. Some of you came in a bit late. Maybe you could just allow me, I finish this because I'm almost finishing, right? I finish this and then we can now start again over as I do even the second question, right? But try to follow what you can follow. Try to follow maximally. Sorry for that. Because if I start doing appropriations account, I'll be doing the first step that I started with, you can imagine. Now, ladies and gentlemen, we continue. So look at this note. The purchase consideration on business purchase was agreed at 250 million. This purchase that's 250,000. Remember, we are cutting 3 zeros, eh? We've been cutting 3 zeros. So, ladies and gentlemen, remember that purchase consideration will be debited to the new company being formed, and you credit your realization. So we have here purchase consideration. Purchase consideration, that will always be credited here. Purchase consideration, you credit. Anytime you're told purchase consideration in thousands, we have here 250,000 like that. Purchase consideration, that's how you book it. Always, if I were you, I would have written somewhere that purchase consideration shall always be credited to the realization account. Yeah, always. That's how you write it. So we continue reading. So we are told here, upon incorporation, the new company issued new debentures. You can see now this is coming after. This is coming in part 2. Part 2. That's upon incorporation. Remember, as they want us to give them relation account, partners capital account, Chapeki Limited's account to close off the partnership account. So, ladies and gentlemen, is there anything that we have left here? I don't think so. So please go ahead and balance this. Go ahead and balance this account. Go ahead and balance this account. If, for example, we get the balancing figure being here, it will be again. So debit here, You take it to your P&L. If it's here, it will be a loss. So which side is bigger? Somebody in this case here, go ahead and add this side. You write here. So somebody add this side. Give me a number to write here. Yeah, if goodwill wasn't written off, thanks for that question, and then you are told automatically it has been taken by the new company, you would have debited it here. So credit side, I'm being told is 339, 150 credit. How about the debit? You're writing first of all down here. Also here, you write down here. So debit, somebody add. Add. So Irene has given me again. So I'm being told that this is 262, 265, 250. 265, 250. So then that is very, very good because I always work with a bigger number. 339, 150, 339, 150, meaning that the balancing figure comes here. And if it comes here, it is a gain. So it is a gain on realization, which I'm being told by somebody, it's 73,900. It's a gain on realization, which is 73,900. If you take this minus this, it comes there. So it's a gain on realization, which comes here. So is that okay, ladies and gentlemen? Somehow, you know, it's not about perfection. It's not about perfection. It's not about perfection, but you really have to ensure that, yeah, great, great. Thank you so much. So, of course, from here, I'll be able to borrow something. But for now, allow me to rub this. Allow me to rub this. Yeah, allow me to rub this. Thank you so much. Allow me to rub this. So remember, now in the partner's account, we will have a client's name by Chapeki Limited's account. That's still number one. Remember, number one, they want us to do three things. They want us to do realization, partner's account, and the Chapeki Limited's account. Chapeki is the buyer. Chapeki is the one who is taking over our assets and some of them. So I'll be able to have this account. So from there, I hope you guys are ticking. I like ticking whenever I'm doing this. I hope you guys are ticking things. Let's see. Yeah. So let's see here. So here we are. So like capital accounts, I believe this already we have accrued. I hope we already have drawings. Let's in this case here capture the drawings. These are drawings for partners. So we simply book them under what year? Under partners. And remember, drawings are like expenses. Yeah, so you shall debit. So come here and give us drawings. Give us drawings. Give us drawings. So drawings, what do we have here for drawings, my good students? I can see Chanda is 7,800. Chanda is 7,800. I can see my good students here, Pete is 6,500. 6,500. And then I can very, very comfortably see in this case here that this other ninja is 3,900. 3,900. 3,900. Like that. 3,900. Great. Good. 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 Now, as I do this, there is something very, very important that normally connects this partner's account with my realization. Sorry, I rubbed this pretty fast. Remember, we got a gain on realization. A gain on realization. Of how much? Can somebody remind? Was it 73,900? Can somebody remind me? Can somebody remind me this gain on realization? Was it 73,900? Yeah, please share it out to the partners. It's their gain. It's their money. Share it out. So share it out to the partners using this ratio 2:2:1. So 2/5 for Chanda. 2/5 for Pete. 1/5 for Kidole. For Kidole. Where am I going to write this gain? Remember, the gain has come on the debit side. You can see when these guys were getting commissions, when they were getting interest, when they gain, you credit their accounts. So come and give us here gain on revaluation. Gain on revaluation. Gain on revaluation. So how much do we have here? Gain on revaluation. Gain on revaluation. I'm told 29,560, right? It's only one student who has given me that answer. Thank you, Nancy. 29,560, 29,560, 29,560. And then we have lastly, these are the smaller ninja. These are the smaller ninja. Yeah, remember it's gain on realization, not revaluation. It's gain on realization. You're a very good student. Yeah, it's gain on realization. So this smaller ninja gets 14,780. Whenever I'm a partner somewhere, I strive to be the big ninja. Like managing director, I put in, I strive, I save a lot because I don't want to be a smaller ninja who is getting small things like that. All right. So then can we come to this account now very comfortably? Can we come to this account here very comfortably? Yeah. So this Chapeki Limited is quite a nice account. It should be able to balance by itself. This Chapeki Limited. Remember on the realization, you had the purchase consideration on the credit side. So the double entry is here. Yeah. So remember we have here purchase consideration. You debit here. Purchase consideration. Purchase consideration through the realization. So this realization, this was 200 what here? This was 250,000. This was 250,000. And then now remember this account also gets figures from the partners. So you'll be able to come and give us balancing figures. Talk of balancing figures from partners' accounts. From partners' accounts. You write each partner here. So we have Chanda, we have Pete, we have in this case here Kidole, like that. So then can you kindly do me a favor? Come here straight away and give us, and this must always come here. This must always come here. Purchase consideration here. Purchase consideration. Purchase consideration, which in this case here is 250,000 in total. So it must always come here, but you don't share this as per the proportions. Don't share, not shared using the proportions. You get balancing figures. You get balancing figures. You get balancing figures. So let's start with this ninja called Chanda. Are you able to add here for us 20 plus 10, 400 plus 7,800? Are you able to add for us? So already Sharon has given us figures. Already Sharon has given us figures. Remember purchase consideration. If you want to know whether you are wrong, for partnership accounts, purchase consideration must always come to the debit side. Otherwise, you are wrong. So there is a ninja who has already given me these answers. A ninja, please, also you should be able to strive to do that. So somebody is telling me that this balancing figure is 106, 630, 630, the first one. And then the second one from this ninja. The name of this ninja, yeah, this ninja is giving me umeandika mbio umepotea. Umeandika mbio umepotea. Balancing figure. Balancing figure. Remember, we're looking at the balancing figure. So the first one, somebody is giving me a figure of 31, 38,200 here. Eh? How about this first ninja here? How much do we have? How much do we have here when you add this, and this? How much do we have there? $144,830. 144,830. So we have here 144,830. So this 144,830 is bigger. So this is 144,830, 144,830. So you subtract. So you take this minus 38,200. This minus 38,200. Will we get this balancing figure? Will we get this balancing figure? Yeah, thank you so much. So are you able to do the rest for me like that? Go to the second ninja, called Peter. Peter, I mean, not Peter. Peter. Do that for the second ninja. Slowly too. Do that for the second ninja. Do that for the second ninja. $118. Actually, me, I want the final answer. I want the final answer. Now you guys are okay now. I want the final answer here for Peter. Balancing figure for Peter. Balancing figure for Peter. They're telling me it is 81. 81,680. 81. I'm being told it's 81,680, like that. How about balancing figure for Kidole? Kidole Sambusa. Kidole Sambusa. 62,690. 62 or 61? Kidole. Be keen. 61, eh? 61,690. 61,690. So if you want to know whether you are correct, see whether the three figures are adding to 250. If they're not adding to 250,000, umetupa mbao. So 106,630, 81,680, 61,690. So this account should always be self-balancing. Very easy. Should always be self-balancing. Like that. So now you are through with part 1 of this question. You are through with part 1 of this question. Yeah, so it's balancing. So can I go to the second part of this question? Can I go to the second part of this question? Remember, in an exam, I don't want anybody to be excellent. If you go for excellence here, you will be able to fail your paper. You're supposed to do all this in 37 minutes maximum. So there are things I expect you to be doing. Like, for example, drawings, I have to get drawings very well. These I'll not even bother because in an exam, I can't balance share of profits. First of all, the moment I do the appropriations account, I'll be able to get so many marks without even knowing what I'm doing. So they want me to do a balance sheet. When they want me to do a balance sheet, there is an account that is really, really important for us to do. So they want me to do statement of financial position, the opening one, eh? Yeah, as we take over those assets and liabilities, they want me to do the opening one. But before that, it will be very important, in this case here, to do a business purchase account. Business. Yeah, it's also known as the purchasing account, yeah. So in this case here, business purchase account. So this is number 2, where they want me to do the opening statement of financial position. But first, I'm doing a business purchase account. Business purchase account, like that. Yeah. So in this case, ladies and gentlemen, we shall be able to start with the, usual here, business purchase account. Now you're looking at this from the company's viewpoint. So we start with purchase consideration. So purchase consideration, do you remember the figure was 250,000? Purchase consideration, the figure was 250,000. Kevin is asking whether you have finished this other account. Yes. Maureen is asking a very, very sensitive question. If the balancing figures are wrong, will you be able to pass one term or shall you go 2 term? Could you kindly advise Maureen? And I remember one time I shared with you a marking scheme. Trust you, ladies and gentlemen, it's not about balancing anything. Like myself, I used to become number 1 in my financial reporting papers, and I never balanced anything, not even one, because the secret falls in exam time management. That is the secret, time management. It is about low hanging, like that. Yeah, you are a one-term candidate. You are a one-term candidate. Yeah, you are a one-term candidate. And that is why, at times I sympathize with students. I normally take you as my own children When I get somebody, in this case, you're sending me a group consolidation question, and now they're asking me at this time that Mwalimu have done this and retained earnings is not agreeing. I really sympathize. And at times I even call you. Even when I'm revising financial reporting right now, it's not about like you want to fix up everything, that you're revising one question for 2 hours. No, it's high level. It's high level. And you'll pass, trust you me. And don't ignore the theory areas, the ones I've been doing. So goodwill, this is what we are trying now to calculate. This account will be able to give us the goodwill. So remember, now here, ladies and gentlemen, what are we doing in business purchase? We are first of all purchasing what here? First of all, we are purchasing those assets that the business took. So when we purchase them, we shall debit those assets and then we credit this account. So we start with assets taken over. So so here now you are debiting the individual assets and then you credit this account. So you come and say here, assets taken over. And remember, assets taken over, you always use fair value. You always use fair value. So assets taken over. So go to that note number 2, pick this. Pick this. So note number 2, now remember you are taking them at fair value, at market value. So then you write there, land and buildings, 115,000. Very easy. The ones that were taken over by the company, remember here, these are other assets and liabilities which were transferred to the new company. So land and buildings, 115,000, fair value. Then we have, ladies and gentlemen, motor vehicle, fair value. Now not net book value. Now we are in the company's premises, the one that is taking them. So motor vehicle is 25,500. Yeah. And then we have office equipment, free marks. Office equipment. So office equipment, how much do we have them? 43,500. 43,500. Ladies and gentlemen, we have here furniture and fixtures. So we have here furniture and the fixtures. I can see the fair value. Remember, we are looking at these agreed values, fair value. So that is 29,550. So we have 29,550. 29,550. Thank you so much. Here we also took inventories. You can see inventories, book value less 5%. So now we are taking the new values. So inventory, so the book value of inventory is here. The book value of inventory is here. It is 25, inventory is low, 31,200. But you see now they agreed we take away 5%. So that will be the same as multiplying with 95%. 95%. So then are you able to give me this figure? Oh yeah. So remember, inventory is less 5%. Inventory is less 5%. 29,640. 29,640. 29,640. Do we have any other item? Oh yes. We do. We do. So, ladies and gentlemen, we did take some other things. So we have here receivable. Receivable is book value less 2.5%. So for receivable, I will take the book value that we have there, which is 25,400. 25,400. I multiply this with 97.5%. I multiply this with 97.5% because 2.5, you see 2.5 is the same as 2.5. It's being given to us as a discount or something. So we have here 24,765. 24,765. 24,765 like that. And then now you come to the liabilities. So liabilities taken over. liabilities taken over. So remember, liabilities taken over, it will be very, very rare to start valuing liabilities. That this liability, which was a bank loan, now because it's being taken over by a company, that now you're going to get a discount. No. Unless you're told, I've never seen that. Liabilities, we always take the book values. The ones that were taken over, you take the book values like that. So you start, ladies and gentlemen, the liabilities, like you have account payable, we are told account payable was taken over. So the payable, how much should I write here? Payable? Payable, how much should I write here? Book value. Don't even go searching for a lot of information, no. So in this case here, the payable was 62,400. Yeah, and then we have a bank overdraft. So we have the overdraft. So overdraft, ladies and gentlemen, is how much? We take it the way it is, 17. Utasamewa na bank. At bank ikusamea sababu umenunua loan. Taongezwa hata. Then we have accrued expenses. Accrued expenses. So accrued expenses, ladies and gentlemen, how much do we have there? 4,000. And there were only 3 if you remember. So come and balance your thing here. So balance this. So if the balancing figure will be here, it is goodwill. If it will be here, it will be goodwill. If the balancing figure will be here, it will be goodwill, and this will go as a non-current asset in the statement of financial position. If the balancing figure will be here, it will be a capital reserve. A capital reserve, which will go under equity. 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 So I'm being told, Irene, is this on the debit or credit? This figure, debit. So I'm being told this is 33,950. How about credit? Credit figure. Credit figure. $267,955. $267,955. So this figure is bigger, right? So 333,950, 333,950. So you subtract this. So this minus this, then the balancing figure is here. So it's goodwill. So goodwill over how much? 65,995. So of course you put here dash just for your revision. It wasn't here. If it was here, then automatically it would have been a capital reserve. A capital reserve. So is that okay? Does it make sense? I can see you used different names here. It doesn't matter whichever name you used. Whichever name you used, well and good. So long as you're able to follow. Use your teachers. The teacher who taught you, use that format. Use that name that he gave you. So is that okay, ladies and gentlemen, up to here? Up to here, is this okay? So basically, I do this to get goodwill for my statement of financial position, or capital reserve for my statement of financial position. So this account is not a must. In an exam, don't do it, because you see you don't have the time. So when it comes, in this case here, when you are arranging, when it comes to goodwill, tell the examiner to go and work that figure out. Tell the examiner, or break because of what your prayers, Yeah. So break because of prayers. We always respect prayers. So she'll come back at 427. So we have statement of financial position, Chapeki Limited. So non-current assets, fair value. So land and buildings, we have 115,000, I'm told. Thank you very much. The other asset that we have there are vehicles. Fair value, you simply, these are free marks. So vehicles. So vehicles, how much do we have here? Sample 25? 500, right? Vehicles. 25,500. So that you can move with speed. From there, from your past paper, the next one is office equipment. Office equipment. Office equipment. Office equipment, we have 43,500. Thank you so much. From there, I can see what we also took over. In this case here is furniture. Is furniture. So furniture, how much for furniture? So we have furniture of 29,550, 29,550. From there, don't forget, in this case here, our goodwill, which we have just calculated. So goodwill, are you able to see the amount of goodwill? We got goodwill. Leave alone the other one, 65,995. 65,995. So from there, you go to current assets. Current assets. So current assets, we pick them. We have inventory. Inventory, you have to be very, very careful. Remember, in inventory, we got a figure of 29. Was it 29,640? Was it 29,640 in inventory? What was the inventory figure? 29,640. But remember, if you read the additional notes, here, in inventory, you'll be able to see something happened. There's a place we read here, note 3. Upon incorporation, the new company issued new debentures at par, carrying interest at 14% per annum. The cash proceeds from the issue, amounting to 50,000, were used to purchase additional stock of raw materials. Raw materials are inventory. Yeah, raw materials are inventory, worth 15 million. So in this case here, the inventory, so from the issuing, just a moment, the cash proceeds from the issue amounting to 50 million were used to purchase additional stock of raw materials worth 15. So of course, as we are working with fair value, so plus 15,000. So plus 15,000. Remember, we're cutting the 3 zeros, eh? So then this gives us what here as inventory? As inventory, this will give us what figure? 44,640. 44,640. Thank you very much. 44,640. These are marks passing like that. So after inventory, we have receivable. There is no additional note on receivable. We had already computed this. How much do we have for receivable? 24,765. 24,765. 24,765. From there, ladies and gentlemen, of course, we have cash at bank. So we have cash at bank. I will not do. I can even write for him. I can even draw for him something like this. I will not do the cash at bank. But because I'm here to teach you, not for exam purposes, I will come and do a bank account. We can do a bank account pretty fast. So bank account pretty fast. So what have they? First of all, we issued debentures. We issued debentures, so we debited our bank. We credited 14% debentures. So we have here debentures. Debentures worth how much we are debiting here? Debentures worth 50. 50, if you remember 50,000. Yeah, 50,000. And then remember, immediately we bought raw materials, eh? So raw materials bought. Raw materials bought. Raw materials bought. This was 15,000. And there is something else that we did with this money. There is something else that we did with this money. There is something else we did with this money. There is something else we did with this money. So you can see here, accrued expenses were settled in full. So is there somebody who is able to see our accrued expenses? Anybody who is able to see our accrued expenses? Accrued expenses. So accrued expenses were 4,000. Accrued expenses were 4,000. So accrued expenses were 4,000. So we debit accrued expenses account, we credit here. This bank balance, this bank account, do we have any balance that was brought forward? Yeah. So if they tell you that there is a bank overdraft, that the bank overdraft is a balance brought down, but on the credit side. Because bank overdraft, once this money comes, like the proceeds, you don't have to be told that the bank overdraft was paid. You don't have to be told. That is general knowledge. So we have a bank OD, a bank overdraft of how much? A bank overdraft of how much? 17, I'm being told 17,550. So 17,550, 17,550, 75. And that is it. So go ahead and give me the balance carried down. It will be here. Balance carried down. It will be here. So balance carried down will be here, 50,000, 50,000. An exam within those 37 minutes, you'll not be able to do this accurately. You won't be able to do this accurately. I'm being told it's 13,450. It's 13,450. This is what you bring here. So they have told me, Mwalimu, this one we can't draw. That even if I was to draw an emoji for an examiner, I would rather draw one in this case here. That's miles. That's miles. Or don't draw emojis in an exam. Don't draw them. So in this case here, we have here 13,450. 13,450. So please come and give me the total assets. Give me total assets. Give me total assets. Total assets. So if you add up everything, what do we have in total? Total assets will end up giving us what figure? From everything. You're adding up everything. You are adding up everything. You are adding up everything. 280, 2881, 70, 2881, 70. Can somebody else confirm that figure? You're adding up everything from here, vehicles, everything. Everybody's getting their own figures. 362,400 seems to be popular, right? 362,400 seems to be popular. 362,400 seems to be popular. So I would have continued down here, but remember I don't have space. So for me, I'll come and look at equity and liabilities. So we have here financed by equity and liabilities. So you begin with equity. So equity, what do we have there? Share capital. So equity, go to note number 3. Note number 3, they told us something about this share capital. That we never paid the partners. The purchase consideration was not cash. We are told here, note number 2 actually. Note number 2. The partners resolved to convert their business into that of a company to be named Chepeki Limited with effect from 1st October 2017. Investments comprised equity investments which partners had acquired that can't help us. Look at this point here. The purchase consideration on business purchase was agreed at 250,000. The partners were to become the new shareholders here. The company issued ordinary shares at a par value of shillings 10 each to the partners to satisfy the balances due to them as at the balance due to them as at the closure of the year. That must be the purchase consideration. So instead of giving them cash, we gave them shares. So it means that the share capital, if you remember, the purchase consideration was 250,000. If we had that capital reserve, it would have come here. The capital reserve would have come there. Yeah, it's not there. All right. From there, ladies and gentlemen, we go to non-current liabilities. We go to liabilities. First of all, we start with non-current liabilities. So non-current liabilities. Non-current liabilities, what do we have? Remember the 14% debentures. Do you remember we issued? Debentures worth 50,000? You must have forgotten. I hope not so. Do you remember the debentures worth 50,000? They are forgotten. Yeah, debentures, we issued them somewhere here, 50,000. And then we go to current liabilities. Current liabilities, it's only the payable. It's only the payable because remember, in this case here, the overdraft was paid. So it's only the accounts payable that we have already been able to do abracadabra in this business purchase account. Payable, is there somebody who can be remembering the payable amount? Anybody who can be remembering the payable amount? 62,400, 62,400. And that is it. So come here and combine, in this case here, total equity and liabilities. Total equity and liabilities, how much do we have there? You take this plus this plus this. If we are accurate, then it should be able to add to this 362,400. Yeah, because this is 300. So we have here 362, 400. 362, 400. Then that is it. 362, 400, and it has balanced. But in an exam situation, it will be very hard for you to balance that question within what year? Within, it has taken me more than 1.5 hours to do this. It has taken me more than 1.5 hours. For you, it is this, like I can even, maybe you have forgotten all the other procedures. But you see Roman 2, where they want you to put Chapeki Limited's statement of an position, some of these things that you don't even need any workings. You can go and post them and you'll be able to pass. You'll be able to pass. You'll be able to pass. So that is it, ladies and gentlemen. That is it, ladies and gentlemen. Somebody wants us to do the bank account. No, we shall not do it. We are okay now. We are okay now. So then I have a proposal. I have a proposal that we go and redo this question ourselves very, very well. If possible tonight, see like how many possible entries you can have correctly, all right? And then if possible, tomorrow, I don't know what time you guys will go to church. Because I'm seeing I have is it audit and assurance now? Can see a student really calling me here. Yeah. So tomorrow, I don't know whether it will be 1 o'clock or even 11. You can go early morning service. And then I do published. Yes, we shall be able to upload. So Frida is saying 11. Associated video, I'll be able to get it and send it. So 11 seems to be ideal for all of us. So we meet tomorrow at exactly 11. Otherwise, it has been a pleasure hosting you this afternoon. I hope from this particular discussion, you've been able to take home with you something that you will be able to use come next week. Thank you so much. Cheers. Yep. We shall overcome. We shall overcome. We shall overcome. Thank you so much. Be blessed. Be blessed. I love what Mombi is saying there. I'm getting better. I'm getting better. I'm getting better. Rekesa, I see you. I see you. Cheers. Let's meet in the groups.